seguidores del portal de lacartita.com. Aquí está su servidor Ricardo Lezama, hablando un poquito sobre las tasas de la Fed y pues toda la controversia a su alrededor, explicarles un poquito cuál es la función de la Fed. Ellos básicamente emiten deuda o dinero a bancos y regularizan la tasa de interés a la cual ellos pueden emitir deuda. Entonces, si el jefe de la Fed o el líder de la Fed dice van a transmitir este tipo de deuda a esta tasa de interés, los bancos tienen que seguir ese interés como un mínimo para poder emitir deuda, y la diferencia es en que ellos pueden agregar un porcentaje adicional para poder tener una utilidad, ¿no? Esa es la función de los bancos. Los bancos tienen deuda que emiten a cierta tasa, y pues ellos generan utilidad con la diferencia entre lo que la Fed dice que es lo básico y lo que ellos eh, eh, programan. Finalmente, lo que sí les tengo que dar en cuenta es que la Fed también tiene otro mandato, que es no necesariamente decir, estos préstamos tienen que estar emitidos con cierta tasa, sino que también tienen que ver que la economía esté lo más cerca posible de empleo completo. Este concepto básicamente quiere decir que si la economía tiene un empleo completo, pues ellos pueden llevar a cabo diligencias para estimular la economía. Por ejemplo, ellos a veces le compran deuda a las mismas empresas en cuestión masiva. Esto lo hicieron durante COVID, donde compraron deuda vinculada a empresas para poder resguardar los empleos de mucha gente. Y lo hicieron por medio de fondos indexados, distribuidos de forma básicamente egalitaria entre varias empresas. Entonces, de esta manera, al ellos regularizar eh, el dinero, el mismo dinero, y poder imprimir dinero o regularizar o reducir el valor del dinero o incrementarlo con tasas de interés más altas, la Fed controla mucho de la economía, mucha deuda. En el caso de Trump, él tiene un interés muy particular. Como él tiene tanta deuda, él se ve con el interés de bajar las tasas de interés para poder refinanciar. Trump tiene un interés muy peculiar con la Fed porque él es el rey de la deuda. Él mismo se ha autodenominado como alguien que necesita esa deuda. Él es el rey de la deuda. Es un poquitito como el Rob Kiyosaki, ¿no? Muy, muy propenso a la deuda. Y como bien sabemos, hay muchos edificios en todo lado que están financiados por deuda y solamente hay un poquito de dinero real, entre comillas, que lo respalda. Entonces, cuando Trump dice, yo quiero más deuda y la quiero a una tasa de interés más favorable, él necesita que la Fed baje la tasa de interés. A él le puede valer queso que la Fed no tenga motivos actualmente para reducir esa tasa de interés. Él quiere lo que él quiere. Entonces uno tiene que interpretar mucho de lo que sucede entre Trump y Jerome Powell como una controversia innecesaria, una controversia que en realidad señala que este señor está viendo otra vez más por sus intereses. Todo lo que circula a este señor es nepotismo, es política favorable para él personalmente. Y lo que la gente no entiende de pronto en Estados Unidos es que un servidor público tan explícitamente tenga esta forma de operar. Este modus operandi que a veces se asocia más con estados fallidos, estados en dictadura, no es común verlo de una forma tan desnuda a nivel federal en el gobierno estadounidense. Eso no tiene precedente en la opinión de muchos observadores. Entonces, Trump modifica las políticas a su favor. Trump, ese es su modus operandi, y para muchos es difícil creerlo. Para muchos es como algo sin precedente, algo que no ven como posible en Estados Unidos, pero pues las leyes que están hechas más favorable para alguien con el plato de personalidad que tiene el señor, y a la misma vez, de por sí, hay mucho privilegio ejecutivo para que el presidente haga y deshaga leyes a su favor. Lo podemos observar desde Obama, cuando él, por ejemplo, podía usar un dron para eliminar a enemigos del Estado. Y él podía determinar quién era ese enemigo. Entonces, en el caso de Trump, una gran diferencia es que él puede modificar las leyes a su favor personal. Es decir, si él ve por sus intereses, técnicamente no es ilegal, pero es inmoral. Y es algo que los mismos votantes pueden tomar en cuenta a la hora de elegir, no necesariamente un presidente, porque pues ya es demasiado tarde para ello, pero ciertamente cuando elijan políticos cercanos a la presidencia o rechacen la nueva Cámara de Diputados, el Congreso, perdón, en Estados Unidos, relevante para este nuevo gobierno del 2026. Entonces, Trump, reitero, está modificando leyes económicas a su favor, leyes y normativas para su familia. Actualmente, el gran interés con la Fed es reducir esa tasa de interés para que él pueda refinanciar mucha de su deuda. Su empiro, tal cual, está dependiente de financiación barata. Durante 2020 y previo a ello, ellos tuvieron que refinanciar muchos de sus edificios. Se vieron obligados a lo largo bueno, no obligados, simplemente en curso de su operación de bienes y raíces, consumen mucha deuda, expanden en todos lados y con una tasa de interés de la Fed, la mayor consecuencia para la deuda en general, pues ellos necesitan tener más eh, ¿qué diría yo? Más financiación a una tasa de interés más favorable. Ellos necesitan una tasa de interés que sea más baja. Hola, hola Sofía. Eh, Perdón por no contestar, pero pues aquí estoy platicando sobre las tasas de interés y la Fed. Muchas gracias por estar conmigo. Soy Ricardo. Eh, el portal se llama lacartita.com. Hablamos sobre un sinfín de cosas relacionadas a la política México-estadounidense. Hay relaciones muy interesantes. Obviamente hay mucha fraternidad entre los dos pueblos, pero muchas cosas de conflicto. Eh, y actualmente, hoy se me dio la gana de proveerles un poquitito de resumen sobre la Fed y también sobre por qué es interesante ver cómo la Fed tiene una funcionalidad que no son unos izquierdistas socialistas, son unos operadores financieros que se encargan de que la economía sea estable, de que exista empleo completo, como le llaman ellos, full employment. Y pues esos son factores que ellos miden a la hora de emitir deuda y específicamente consumir deuda y la tasa de interés que le fijan sobre esa deuda. ¿Qué quiero decir con eso? Pues la tasa de interés es lo que cobra la Fed a la hora de emitir deuda a bancos y esos bancos están permitidos agregarle un poquitito más para tener utilidad. El único detalle acá es de que para que eso sea rentable para los bancos, pues emiten billones de deuda a empresas, a consumidores, etcétera. Entonces, reitero, cuando se trata de la Fed está con la obligación de fijar esa tasa de interés de tal manera que promueva el empleo completo y a la misma vez que esa tasa de interés permita un funcionamiento cuerdo de la economía. Porque obviamente, como ustedes se pueden imaginar, si hacen que la deuda sea demasiado barata, tenemos hiperinflación. Y como la mayoría de la gente tiene un sueldo y no necesariamente tiene bienes y raíces o propiedades o pues entidades económicas que se fijen con esa tasa de interés, pues la hiperinflación les pega como una tonelada de concreto, ¿no? O sea, les pega como mula. Es decir, una tasa de interés muy baja hace que todo se infle en valor, porque hay tanta deuda y tanta compra y venta con esa deuda que con un corto plazo de tiempo todos los bienes empiezan a incrementar en valor, se incrementaba en valor porque mucha gente tuvo nuevo acceso a deuda barata. Y ahora con este actual, esa, esa, todas estas casas incrementen casi el doble de valor. Pues es lo que ha sucedido. Y esa es la opinión humilde de su servidor. Y diría yo que a la mera hora de emitir deuda, la Fed está con la obligación de tomar esos factores en cuenta, ¿no? La Fed está eh, en obligación de poner esa deuda a uso, pero a la misma vez de moderar cuánto consumen de deuda tanta gente. Entonces, eso es lo que les quería actualizar. La Fed mantuvo las tasas de interés fijas. Tuve que revisar perdón, mis datos, pero la tasa de la Fed es para toda la deuda nacional por la Fed, que permite que los bancos suban o alcen sus deudas de acuerdo conforme la tasa de interés que el mismo gobierno federal establece por medio de la Fed. Ahora, la Fed es independiente. La Fed no es como Kristi Noem o Tom Holman, que básicamente ejecutan el plan de trompas, sino que la Fed es independiente y es liderada por Jerome Powell. Obviamente se pueden dar cuenta que un país y todos los países que tengan un brazo independiente para normalizar la deuda de cualquier cosa, eh, pues ese brazo independiente va a ser una entidad muy política en cuestión bueno, o sea, su misma funcionalidad va a tener consecuencias políticas, porque ellos pueden hacer y deshacer economías con un juzgamiento poco prudente y a la vez disminuir movimientos sociales porque la misma financiación no existe para moverlos, ¿no? Pero pues actualmente la Fed tiene una función muy específica y es de normalizar la deuda que se emita en todo el país. Entonces, durante COVID, cuando la Fed redujo sus tasas de interés, pues hubo tanta financiación que se multiplicó la cantidad de megadeudas que se podían usar a la hora de financiación de casas. Por eso tenemos casas que ahora valen 80% más de lo que costaban en el 2019, porque el ciclo de transacciones, pues, se comprimió, ¿no? De pronto sí se podía apreciar 80% esa propiedad, pero pues con una disponibilidad de deuda, la Fed se vio en esta situación de lograr resumir en muy poco tiempo el, la cantidad de consumo, ¿no? Entonces la Fed mantuvo sus tasas de interés fijas a 4%, 4 y un cuarto, entre 4 y un cuarto y 4 y un medio, básicamente 4.25. Eh, y pues eso tiene consecuencias, ¿no? Por ejemplo, las tasas para hipotecas van a ser muy bajas, perdón, muy altas. Y eso va a hacer que las transacciones se muevan muy bajas, ¿no? El volumen. Entonces, siendo ese el caso, la Fed va a estar en esta posición curiosa de, pues, contradecir a Trump a lo largo del mandato de Jerome Powell. Jerome Powell el próximo año ya no va a ser el presidente de la Fed. ¿Y qué es lo que va a suceder cuando la Fed se vea obligada o bueno, no obligada, porque en realidad institucionalmente no está obligada a cumplir con la palabra de un presidente? Lo que el mercado quiere es que el presidente y la Fed sean independientes, que cualquier plan político que tenga tanto Obama o Biden o Trump sea independiente de lo que diga la Fed, porque la Fed tiene que asegurarse que la economía no estalle, que no se interrumpa el flujo normal de capital con demasiada deuda o con muy poca deuda. Muy poca deuda, pues nadie puede financiar nada, nadie puede comprar nada, está muy caro todo, tasas de interés que son lo doble de lo usual, etcétera. Pero con muy alta cantidad de deuda, con deuda muy disponible, pues la Fed ya se ve con esta eh, obligación de justificar tasas de interés muy bajas porque hay un volumen exagerado de deuda fluyendo en todo el sistema. Entonces uno tiene que también tomar en cuenta que, hello, I'm just talking about the Fed and the interest rates and how they maintain them the same. So my name is Ricardo, and we're talking about Fed interest rates for lacarrita.com. And Fed rates are going to stay the same. They're going to stay fixed for now. Nothing's going down, which is what a lot of the market wants for flexible financing and increased expenditures. The Fed normalizes at what rate the government borrows and at what rate everyone else borrows as well. So with them having the Fed fix the fund rate or the Fed rate fixed at I think 4.5%, really doesn't matter what the percentage is. What matters is that it didn't go down. And currently, those interest rates are uh, are very high, especially relative to where they were during the COVID crisis. During the COVID crisis, the Fed hit historical lows, which allowed for tons of financing. Now, what do you get when you have tons of financing available to everyone? Lots of expenditures, lots of buying and selling, and the buying and selling with a lot of debt led to people having, artificially speaking, lots of cash to deploy. So with people having cash to deploy at that point, it makes sense that they would be able to finance a house, right? And that's what led to, in a short period of about 6 years, to have like an average appreciation rate on real estate that was at least like real estate for personal use. You had this appreciation at 80%. That being the case, if you have appreciation at 80%, you have the scenario where lots of people are getting outpriced because only a few people can access so much debt and only a few people have the upfront cash to manage it. So you make this division with cheap interest rates between the wealthy or even just middle class folks and everyone else. So you have this massive amount of people who are priced out during that cheap financing time. And now, as prices are starting to adjust to a new financial reality where debt is a lot more expensive, and it has to be because if you continue that cycle of buying and selling with cheap financing, you get hyperinflation. You get hyperinflation not just in the assets that are being bought and sold at this great valuation and also great appreciation, but pre-COVID, but you also get just across the board inflation because buying and selling and transacting at that level makes people raise their prices. Joe Schmo sells their house for $1 million. Joe Schmo also takes that profit and just spends it across the economy. So that's what the Fed really wants to control. It's not a political question. It's really a regulation question, a question of trying to moderate what could be excessive spending. So apologies if you hear a lot of noise. Apologies if you hear a lot of mixed language. I mean, you guys let me know what language you speak, and well, English or Spanish, and I'll talk about the Fed rates. But Fed rates have stayed fixed, and the Fed has a very unpoliticized function. And I think that's one of the things that we have to take away. Like the Fed isn't left or right. The Fed has a specific function to prevent a depression, to prevent mass unemployment, to prevent an economic crash where the function of certain institutions, particularly banking institutions, isn't threatened. Now, that is a very macro function to have, right? It's hard to conceive, but that large concept is what makes the United States so unique in that we have a regulatory form and institution that allows us to conceive of the economy in these terms, in massive terms. So when you have the Fed set interest rates at a rate that is reasonable, you are able to normalize the function of the economy in a way that other countries cannot. And also, the U.S. has so much debt outside of it, denominated in dollars, it makes the currency stronger because it's relevant everywhere. And so that kind of gives it an internet. The dollar is powerful because of its international nature, and so the influx of other currencies also helps appreciate its value. But ultimately, and when I say influx, an influx into the banking sector. But I've digressed. The Fed has a very specific function, and is complying with it. And the Fed interest rate is currently managed by Jerome Powell, or led by Jerome Powell, and various other officers in that sector. And so Jerome Powell is in this unenviable position of doing two things simultaneously. and one of them without intending to do it, but kind of obligatory. Um, Jerome Powell has to regulate the economy in a way that doesn't crash it. And right now, it's been reasonable for him to provide a stable interest rate. He's raised it quite a few points from where it was during the pandemic era in 2022 and 2023. Um, and these and he's lowered it, but he's lowered it not at the rate that someone like Trump would like for mortgage rates. So mortgage rates are set differently, set by banks, and they reflect the conventional Fed interest rate. Now, the Fed rate is the rate at which people can borrow money, right, from banks or banks from the Fed. And then banks themselves are allowed to loan that money at an additional interest rate at a point or two more than that rate, depending on various sectors regulated by the banks themselves and the size of the loan that they're originating. Basically, as it stands, the majority of the Fed is in agreement that the economy is weakening in some senses, and so that would justify the deployment of additional capital, which would need a lowered interest rate. So, as it stands, however, if they were to do this too soon, then you would have a hyperinflation scenario where we are devaluing our currency so fast and borrowing so much that borrowing and devaluing the currency is only going to make it more onerous when it comes time to pay that debt back. The government borrows to finance virtually everything, and including employee wages. But the vast majority of expenditures in the U.S. economy isn't necessarily for your average federal employee, but it's for these infrastructure projects, for these military projects that are actually paid out to independent contractors and paid out to various institutions that have defense expenditures linked to them. And also, the reduction in taxes has made it so that the tax base from which the government borrows, or yeah, well, the government uses to finance its borrowing, is increasingly reduced. That was one of the controversies around the big beautiful bill. Now, when you have so much debt and that financing aspect isn't working in sync, you have a problem. Basically, the government is borrowing more than it can conceivably pay at any rate, even with the cuts. And then you actually have the priorities of that big, beautiful bill. The priority of that big, beautiful bill is to reduce the number of people in the United States, right? One of the issues is that if you have mass deportations, inherently, the number of people that are being deported will reduce the labor force and increase at some level the price of goods because there won't be this buying and selling cycle associated with having more people, just generally speaking. It won't necessarily increase wage because that is a political and social construct that you'll have to have minimum wage laws affirmed. Then the actual behavior of employers will have to be regulated. And I don't see that happening with the Republican administration. A lot of folks think that if you deport, then you increase the wage. That's not necessarily true. If you deport, you might not even have a project to go to because deportation of workers leads to the lack of scalability. If you don't have an elastic workforce to engage a project and you only have a few folks who are trying to get wise with minimum wage laws, you don't have economic vibrancy. And so that is one of the issues that will be a downstream consequence, but I think is already manifesting itself with stalled projects, stalled innovation. And then you see it in every sector of the economy. Right now, I was alluding to construction and building, but in the case of the, I suppose, services sector, research and innovation is tamped down because one, the big beautiful bill, and then also the impetus from the Republican Party, which is really in control in the driver's seat in terms of policy, is cutting university funding. So when you cut university funding, you're cutting innovation in the United States. Innovation in the United States is being reduced because we have this large prioritization of deportation, of enforcement, things that are very much inflationary in nature because it's expensive to do this stuff. And then it's also reducing the number of people available, and it's increasing the price of everything because it's hard to produce without people. And if you don't produce, you don't have a lot of output, and that output becomes more expensive because the people you do have it with aren't as productive. So you have this like cycle of low productivity, high interest rates that have to be high for the reasons I mentioned earlier. If you have too much spending, you have this overheated hyperinflationary environment. And ultimately, if you have a high inflationary environment, you can't employ people because everything's too expensive. See how that works? I think we have to be reasonable across all boundaries or across all sectors or platforms or opinions, really, or topics. And what I think is happening is the Fed is doing their job correctly. It's everything else that's out of whack with it. If you want to borrow to finance and reduce, you want to finance essentially a tax cut for the ultra rich, and you want interest rate to go down, you have to take into account that they can go down for the legitimate reasons that Jerome Powell has cited. You're going to have hyperinflation, you're going to have overvalued assets, you're going to have these market conditions that aren't sustainable for a real economy. For finance folks, that might be a great scenario, but for the real public, it's going to be very inflationary if we lower interest rates too soon. And so Jerome Powell is in this unenviable position of contradicting Trump because he has this mandate to regulate the economy, to make sure we have full employment, but also to have borrowing conditions that are safe. You can't let people borrow if the economy is going to move so fast that borrowing won't be a viable way to finance sorry, that borrowing will be just unreasonable and cause inflation in and of itself. Because if you borrow to buy a house at $400,000 and then the next person is allowed to borrow and finance that same house for 420 and so on, you create this cycle of over appreciation of inflation. So um, apologies if you're just catching me midlife, but what I'm talking about is the Fed interest rate. Jerome Powell has kept it the same, kept it low. But what's really of interest is the issue that we're seeing, which is the conflict of the Fed with the federal government. And the Fed is independent. The Fed is supposed to be a independent body that regulates interest rates. If the Fed is not allowed to be independent, then we have a problem because now we have two bodies that cannot talk to one another because the global market is financed with US based capital, US linked capital. One of the things that makes the country operate and be a great country is its finance sector. So if you don't have this secure capital structure, a well regulated capital structure that is founded on facts, not feelings, to use a political meme, um, then you have a problem in confidence. And investors won't be incentivized to park their capital in the United States. They'll turn their dollars into euros and just deal with a government that is a little bit more stable. That is the issue. So we have this uprising with respect to capital markets where you have these right wing influencers trying to get interest rates to lower because maybe they want to refinance, maybe they want to do certain activities that are just too expensive to do with the current environment, but the downstream consequences of those activities are inflationary, and so that's what the Fed is trying to prevent. They're thinking not just in terms of the borrowing and lending, but of what people will do with that borrowing and lending. And if that raises the price of virtually everything, they're not going to let it happen. I think that's what the takeaway lesson is. It's going to be a very difficult period for people who want to finance and refinance because interest rates will and should stay at the rate they are. But folks like Trump have a personal interest in making those interest rates as low as possible. They don't care about inflation and hyperinflation. That never really hits them. They'll just get access to more loans, more debt, and live and outlive, and that debt will outlive them actually. And so that's one of the things that's happening with Trump, where he has so much debt that a point or two down, or like a percentage point, like a decimal of a percentage point, will impact his holdings and his money directly. So he wants borrowing rates to go down so that he could personally profit from that, and so that some of his crypto holdings go and appreciate in value, some of his stocks and bonds appreciate in value, and so on. So people who are highly financialized and leveraged They really want that interest rates to go down. But the average person probably wants everything to stay the course because there's so much uncertainty, right? We have tariffs that are going to cost a lot of the consumers. Basically, tariffs are taxes. So if you have increased taxes so that the government can finance its tax cuts for billionaires, you have this scenario where you're spending a lot, but you're not spending it on people. You're spending it on these defense contracts, on these projects that are oriented towards the private sector. And people are living in an inflationary environment where they can't buy groceries because it's too damn expensive. So you have this cycle of constant appreciation of assets and constant reduction in the value of the currency. And most people get paid in currency. Most people don't have the ability to leverage assets and live off the loan of an interest, right? Most people don't have derivative products like that. Most people get paid a wage, and that wage stays the same over years and years and years, and it kind of goes up 5%, 10%, maybe even 20%. But in those scenarios, that wage isn't as valuable because of what I just mentioned. You have interest rates that are too low and assets are appreciating way quicker. So, sure, you got a raise at work, but you can't buy anything because you don't own anything. If you don't own anything, you can't finance against that. So, you see the issue? If you have interest rates get too low, you're going to have people buying and selling those same assets that are financing the uber rich, but at a price that is inaccessible for people who are getting paid in the currency. That is the issue. The currency is being devalued because it makes it so that the assets of the uber rich are more valuable relative to that currency. That's what's happening with interest rates. With interest rates, you have a scenario where people are getting paid a worthless wage essentially, but assets are being valued relative to the interest rate set by the Fed. And that's kind of what's in the mix. That's what we're going to be seeing in the foreseeable future. So I really appreciate you guys taking the time to be on this live. I got more people than I expected. Thank you.